A very good afternoon, everyone, and thank you so much for joining us this afternoon for an important session on tax filing. Our speaker for today's session is Ms. Asta Jain, along with Akshat. Ms. Asta Jain is a commerce graduate from Delhi University. She is an associate director with MS in Max Management Service Limited, which is among the leading financial, tax advisory, and assurance firms in India. She has worked for 3.5 years in audit and assurance at Deloitte Haskins and Sells. She is the founder of the Tax Code, a venture of R8 ValueCon Private Limited, founded in the year 2019, and a member of the Direct Tax Committee at the Institute of Chartered Accountants of India. A warm welcome to you, Asta and Akshat. Now the stage is yours. Over to you.
Thank you so much, Venkat, for the warm introductions, and super excited and super happy to be here again. I see the number of people going up. As we begin this session, I'd love to share that we've prepared this session with the upcoming tax filing season. 31st July being the timeline, and then kudos to the team at Ethica for planning this in advance, so that all of you can actually not wait for the last minute rush and plan and file your taxes properly from now itself. So a very good afternoon to all of you. I hope so quick check, right? Quick check on the chat, and then please feel free to use the chat as much as possible. We did another session back on tax planning in the month of January. Can I have a quick round of yeses in the chat as to how many of you were there in that session? Love to know how many of you did join us for the tax planning session. And in fact, the next question is going to be for all the yeses. Did you all plan your taxes after that session? Okay, so those of you who are not, that's okay, right? You can always go back and check on the recordings and see it for yourself to further plan your taxes in a better way. But yeah, today's session, we're going to talk in detail about tax filing. Usually, we give a call to some of our close friends, some of our relatives at the last time, the last second, or take some professional advice wherever and whenever we want. But I think that's what we want. We want all of you to be informed. We want you all to take informed decisions when it comes to your tax filing as well. We do not want you to, get messed up and take any wrong decision when it comes to filing your taxes, right? So, therefore, we'll begin the session with much ado. Very, very warm welcome once again to all of you. The format of this session is, Asta will take you through all the content that we've prepared and all the activities that we've planned for you. Please keep your questions coming in. What we'll try to do is we have a team of our experts, Vishal, Srinath, all of them have CA as their backgrounds. They are professional CAs. What they'll do is they'll try to answer as many questions as they can on the chat when they come along. Whatever questions cannot be answered in the chat, Asta will take them at the end of the session, right? But absolutely, we'd love this session to be super interactive. Please use the chat. Please use the Q&A section to put in your questions so that we can track how many have been answered and how many are left over. It gets a little tough to monitor the chat, but yeah, you'll be seeing the Q&A section there. So please make full use of that, right? So yes, once again, namaste and a very warm welcome to all of you. We do want to put out a disclaimer out there that we at Pennywise are financial educators. We are not agents or advisors. And during this entire course of the bootcamp today, Asta and team will all try to share all the possible ways in which you can plan as well as file your taxes the better way. But yes, we do want to put a disclaimer out there that you have to be very sure and you'll have to be very careful while you're filing your own taxes. If there is anything that you're not able to understand, we'd request you to take professional help. You could reach out to anyone whom you know who's from a CA background, as well as you could reach out to our team for any sort of help, for which we'll share more details at the end, right? So yes, say hello to your mentor. Venkat has already introduced her, and within a minute, the stage will all be hers. Let's begin this session. And before we do that, quick check from all of you. On a scale of 1 to 10, how excited are you for this session? Let's use the chat once again. So I see almost 300 people. How excited are you with this session? 10, Somebody said 70. Was that a typo? 9, 10. Oh, wow. Ahmed says 110. Asta, you'll have to do some amazing work here to meet that 110% expectation. Awesome. Awesome. So glad. So glad. That's what you want. We want this session to be super interactive. And, we'd love to take as many questions as we can at the same time, give you all the content that is possible. So yeah, over to you, Asta. You could take up the screen sharing from here.
Yeah, thank you, Akshat, and thank you, Ethica team, for such a warm welcome and my introduction. Thank you. I'll just present the screen to take the presentation forward.
By the way, just another disclaimer till the time Asta brings up the screens. If you have any questions with respect to the 2,000 rupee note, you can also ask that. So we'd be more than happy to solve all your queries on the 2,000 rupee note, right? And in case anyone has a lot of 2,000 rupee notes, all of us in the panel are very happy to accept it. Just joking, but yeah, feel free.
So my screen is visible?
Yes, Asta, go ahead.
Okay. So good afternoon, everyone. So I'm Astha Jain, Chartered Accountant. I think Akshat has given my introduction. So we've already done a very detailed tax planning session in the month of January, wherein we understood what all components are there in the salary structure, how they are taxed, what additional components you can add in the salary structure, how is house property taxed, and various other components, taxation of investments, and everything we have covered. Today's session will be primarily covering on the tax filing aspects and what all documents are there which play a very, very vital role in helping you to file your income tax return correctly. So we'll be covering who is required to file an ITR, which ITR form you have to use, what all documents you need to are required to file ITR. So what all documents you need to fetch and obtain from your bankers, your lenders, and everyone, your employer, to file the ITR. How to analyze your bank statement, how to analyze your capital gain statements and holding statements. Then we'll also be covering how you can read your 26AS, your AIS, your TIS forms, and how and what figure you have to pick from these statements for the purpose of ITR filing. Then we'll also be covering what are the important disclosures that you have to do in your income tax return. And in the last, we'll be doing a walkthrough of ITR 1, which will help you all understand that how you have to fill your income tax return form. So first and foremost, I would like to cover that who is required to file an ITR. Is everyone required, or there are certain class of people only who are required to file an ITR? So the income tax department, the government has come with a criteria for the people who have to file the ITR. So filing of income tax return is mandatory in few cases. The first and foremost case is that if your income, if you are a resident and your age is below 60 years of age, then if your income is up to 2,50,000, then there is no need to file the return. So it's not mandatory. If you want to file, then it's optional. But only if your income exceeds 2,50,000 rupees, then only you are obliged to file your income tax return. Similarly, for people who are in the age group of 60 years to 80 years, for them, the basic exemption limit is 3 lakh rupees. So if your income exceeds 3 lakh rupees, then you are obliged to file the income tax return. And for people whose age is more than 80 years of age, if their income exceeds 5 lakh rupees, then only you are obliged to file income tax return. Here, when I talk about income, you have to see your income before the deductions, which means you have to see your income without subtracting the deductions under section 80C, 80D, 80TTA, and several other deductions. So what you are actually earning without claiming any deduction, if that income is more than 2,50,000, then you are obliged to file income tax return. This is the first condition. The second condition is that even if your income is less than 2,50,000, I'm just taking an example, assuming that your age is below 60 years of age. So if your income is even less than 2,50,000, but you have a bank account outside India, or you hold any immovable property outside India, then even if your income is less, you are obliged to file income tax return in India, because there's one more condition that every resident person who has any asset located outside India, including any financial interest, which means even if you hold one share of let's say you hold one share of Google, or you hold one share of any other foreign company, then you are obliged to file income tax return in India, even if your income is less than 2,50,000. The third condition is that if you are a signing authority in any foreign bank account, for example, your income is less than 2,50,000, but your employer or your relative has made you a signing authority in a foreign bank account, or you yourself have a foreign bank account, then also you are obliged to file your income tax return, irrespective of what your income is. The fourth criteria wherein it becomes mandatory to file income tax return is that if you have deposited around more than 1 crore rupees of cash in your current account. So current account will be applicable for people who are doing any business. So if you are doing a proprietary business, or if you're doing any business, so then if you have deposited more than 1 crore in your current account, then you're obliged to file income tax return. Sorry. The next criteria is that even if your income is less than 250, 3 lakh or 5 lakh, as the case may be, if you're doing a foreign travel and during the entire year, your total expenditure on foreign travel is more than 2 lakh rupees, then that person is also mandated to file income tax return. Next criteria is if your total expenditure, annual expenditure on electricity of your house exceeds 1 lakh rupees. If it is more than 1 lakh rupees, then also you are obliged to file your income tax return irrespective of your total income. Then these four criteria which you are now seeing on the screen has been added lately. If your total sales or your gross receipts of the business that you're doing exceed 60 lakh rupees, then also you're obliged to file income tax return. So there's a possibility that your gross receipts are 60 lakhs, but you are incurring a loss, or you are having a profit only of 1 lakh rupees. So your total income is less than 250, but still you are obliged to file your income tax return because of the condition that your gross receipts exceed 60 lakh rupees. And in case you are not doing a business, you are doing a profession, then this limit is only 10 lakh rupees. So the moment it exceeds 10 lakh rupees, you're obliged to file income tax return. Then another condition is that if there's a deduction of TDS or TCS of 25,000 or more, then also you're obliged to file income tax return. It can happen that your income is less, but there's a TCS deduction because you've purchased a vehicle, and on purchase of vehicle, TCS is being collected, and that amount exceeds 25,000. Then in that case, you're obliged to file income tax return. And the last condition is that if you have deposited more than 50 lakh rupees in your saving bank account, then also you are obliged to file income tax return. So these are various conditions which covers. One condition is of income criteria, and other conditions are linked with your expenditure or your gross receipts or your deposit in your bank account or your TDS, which irrespective of income are scenarios wherein you become obliged to file income tax return. So if you fall in any of the criterias, then you're obligated, then you are mandatorily required to file income tax return. Now, once you've understood that we are obliged to file income tax return, the next question comes to our mind: which ITR form I have to file while filing income tax returns? So there are in total 7 ITR forms which are there: ITR 1, 2, 3, 4, 5, 6, 7, and various ITR forms are applicable for different class of individuals, and in individuals also what type of income or what all types of income you have. So it really depends upon whether you're an individual, you are a company, you are a trust. And the second criteria is, if you are an individual, then the second criteria is what all types of income you have. So it really depends upon the type of income that you have to identify the ITR form applicable to you while filing the income tax return. So the first criteria is, the first form is ITR 1, which is normally applicable to salaried individuals. This is applicable. ITR 1 can be filed by resident individuals or Hindu undivided family whose income is up to 50 lakh rupees. So if your income is more than 50 lakh rupees, you cannot file ITR 1. And in this ITR 1, you can have income from salary, you can have one house property, you can have income from other sources like bank interest, like dividend. Then your agricultural income can be up to 5,000 rupees. and you should not be director in any company. So if you fall into these criteria, then ITR 1 is applicable. Otherwise, you cannot file ITR 1. For example, your income is more than 50, you cannot file ITR 1. If you hold more than 2 house properties, you have 2 house properties on which you are earning rental income, so then you cannot file ITR 1. Your agricultural income is 10,000 rupees, you cannot file ITR 1. And suppose you're a director in a company, but you are a salaried individual, then also you cannot file ITR 1. So you have to see all the conditions to find out which ITR form is applicable. The second is the ITR 2, wherein if your income is, if you're a salaried individual and your income is more than 50 lakh rupees, then you go ahead and file ITR 2. You have salary, more than 1 house property, ITR 2. If you have capital gain, so capital gain is you have profit or loss from mutual funds, you have profit or loss from sale of property, you have profit or loss from sale of shares. So that is referred to as capital gain, because if you sell a capital asset, all these mutual fund shares, property are referred to as capital assets. So when you sell those capital assets, you either incur a capital gain or a capital loss. So if you have that, you cannot file ITR 1 and you have to file ITR 2. And you have income from other sources like interest, dividend, and if there are any winnings from lottery, then you cannot file ITR 1, then you have to file ITR 2. And where a person is a director, so you cannot file ITR 1. So if you are a director in a company, for you ITR 2 will become applicable, and if you hold any unlisted shares during the year. So these are the conditions wherein you can opt for ITR 2 if you're falling into these criteria. Now we go to the next ITR form, ITR 3. So normally if you're a salaried individual, either you will fall into ITR 1 or ITR 2, or primarily these 2 ITR forms will be applicable. The third ITR form is primarily for those people who are carrying on any proprietary business or any proprietary profession, which means you are earning income through doing business or doing profession, and you are not employed with anyone. So ITR 3 are normally filed by a person who is carrying on the business or profession. He can be a director in a company. He can be a partner of the firm. He can hold investment in equity shares. He can have capital gain income, and he can also have income from house property, salary, pension, and other sources. So there's a possibility that you are a salaried individual also, and you are working side by side. You are also having a business, you are also earning income from business. So you have 2 sources of income from salary and income from business or profession. So in that case, you cannot opt for ITR 2, you have to file ITR 3. So because all the people who are having any income from business or profession are required to file their income tax return in ITR 3 form. Then ITR 4 is normally applicable to people who are doing income from business or profession, but they're opting for a special tax regime which the income tax department has given, which is referred to as presumptive income tax regime, wherein presumptive taxation scheme is wherein a fixed amount of income or a fixed amount of expenditure is being assumed by in terms of law, and you are declaring your income up to a certain threshold limit. So for those people who are opting for presumptive taxation regime, which is covered by section 44AD, 44ADA, 44E, then those persons are required to file their income tax return under ITR 4 and not under ITR 3, because they will not be able to enjoy the benefit of the presumptive taxation if they don't file ITR 4. So these are primarily the 4 forms which are applicable on individuals. There's one more important thing which I want to highlight. Suppose you have a speculative gain or a speculative loss on shares. In that case, even if you're salaried, you're not doing any other business, you're not doing any other business or profession, then because of the speculative gain and loss, you cannot file ITR 1, you cannot file ITR 2, you have to file ITR 3, because in case of speculative gain or loss, the law of the land says that it is considered to be as a deemed business. So in that case, you have to file ITR 3, even if it is a nominal value of speculative gain or loss, then you are mandatorily required to file ITR 3 and you cannot file ITR 1 and 2. So these are primarily the 4 forms which are applicable on individuals. Now, ITR 5 is normally filed by limited liability partnership firms, LLPs, partnership firms, body corporates, AOPs, etc. This is not used by individuals. Then ITR 6 is primarily for companies, private limited, public limited, all type of companies, listed, unlisted, everyone. And ITR 7 is normally filed by trust, societies, political parties, and associations like this. So these three are normally for, you can say, corporates and other type of entities other than individuals. So if you're an individual, you have to choose from ITR 1, 2, 3, and 4. And if you're a company, straight away ITR 6. So these are the basic criteria which will help you select which ITR form you have to file. And it is very important for you to select the correct ITR form so that income and everything is disclosed properly to the income tax department. So I can move to the next section, or should, if there are more questions, I should take the questions first. I can check the Q&A box or the chat before we go on to the next section.
Yeah, so there is one question on the first one, right, which is unanswered. If you can take that up, please.
This one. If someone is salaried employee and has less than 50 lakhs income and also do freelance technical consultancy, they need to file both ITR 1 and ITR 4? No, you have to file only one ITR form. So basically, you are a salaried employee and your income is less than 50 lakhs, but you are doing a technical consultancy. So if you're doing a technical consultancy and you are not opting for presumptive in that case, then ITR 3 will be applicable. But if you're opting for presumptive taxation for that profession, then ITR 4 will be applicable. So either ITR 3 or ITR 4, depending whether you're opting for presumptive or not. It is not the case that you have to file two ITR forms. If you're having salary also and business also, only one ITR form has to be done up. Should I take all the questions? Sorry, I'm not able to understand what is this question. The tax calculation first happens by clubbing both incomes and then there is some calculation. Can you just retype your question? I'm not able to understand. How to set off capital loss house property? I think so. We have covered this in tax planning session, but I'll later in the presentation, I'll cover this aspect, Mr. Sanjay. Then there's I lost money while doing trading on Forex market. Can we consider this capital loss and show while doing tax filing? Yes, definitely you can do that. You should show this loss. Winning from online games, TDS has deducted 30%. So how to get the amount and which ITR form is applicable? So since you have winning from online games, and plus I assume that you are a salaried person, so you are doing salary, so that you cannot file ITR 1 because online games that might fall into lottery thing. So ITR 2 will be applicable, and when you file your income tax return, you can claim that TDS, and if that TDS is not getting adjusted with your income and excess TDS has been deducted, once you'll upload your ITR, you will get a refund once your ITR is being processed. So ITR 2 applicable, and you will get back the TDS as refund once your ITR is processed after file. If someone has two houses, in one house he's staying and another is rented, what is the form? ITR 1. Because one is self-occupied and another is rented. So only one house property which is offered for taxation. So there's only one question left, which I'm not able to understand. So if you can write the question again, I can take it again after covering two more sections of the presentation. Okay. So now the next part of our presentation is what all documents are required to file ITR. This is a very, very normal question. Whenever the tax season starts, my clients call me, ask what documents I have to send it to you. So everyone is confused what all documents are required. That's why I specifically kept this slide highlighting the major documents which are required to file your income tax return. So first and foremost, if you're salaried, you need to have your Form 16. When I talk about Form 16, it has two parts, Part A and Part B. So whenever your employer gives you Form 16, ensure that you have both parts, Part A and Part B. Because Part A shows your total income and as well as your TDS deducted and deposited by the employer. Part B of the Form 16 shows your whole entire salary structure. What is your gross salary? How much HRA deduction the employer has given you? What is your ATC amount? What is your ATD amount? And all the tax calculation and all on your income. What is your tax amount? How much TDS has been deducted? And what is your net tax payable or refundable? So Part B is very, very important, especially if you're doing income tax return on your own. So when you take Form 16 from an employer, ensure that you have both the parts, Part A as well as Part B. The second most important document is your bank account statement. Often people misunderstand that if you are a salaried person and you just get your Form 16, so you use your Form 16 and file your return. No, you have to have your bank account statement. Why you need to have your bank statement? Account statement needed for your filing your income tax return. We'll be covering that aspect in detail in the subsequent slides. So second document is bank account statement. Third is Form 26AS. This is this you can download from the income tax portal. How to download, we'll be covering in the subsequent slides. Fourth document is Form AIS and TIS. This is also downloaded from the income tax portal. How to download, how to use it, and what figures it portray, we'll be covering in the subsequent slides. The next document is FD interest certificate from bank. So if you have any fixed deposits or any, suppose, bonds or anywhere you have invested money on which you are earning interest, so you need to obtain those interest certificates from bank or any institution wherein you have deposited that money. Because you need the interest amount, whatever you've earned, because you would need to pick that figure from those interest certificates and disclose that in your income tax return. Then there are a lot of people who take housing loans, whether you are a self-occupied or you have taken a loan and let out that property, you have given that property on rent, but you had taken a housing loan to buy that property or to construct that property, and you are still paying that EMI, or your EMI has completed on an under construction property. So you have to have those housing loan statements from bank, which shows how much is the principal repayment and how much is the interest repayment. So the principal repayment, you can use that amount as a deduction under Section 80C up to a maximum limit of 1,50,000. And if you talk about interest, there are threshold limits if you are using that loan for self-occupied property, and if you're using that loan for a let out property. We had covered these threshold limits, what is there in case of housing loan, how much interest is allowed in self-occupied and let out, in our January session. And if needed, we can send those threshold limits again after we complete the presentation for the benefit of all. Then another thing is that if you have done any donation to any institution or any societies which are registered under 80G, so you have to have those 80G receipts to claim the benefit of that donation against your taxable income. Then last, if you have invested in any equity share, if you have invested into any mutual fund and you have sold them during the year, then you need to have 3 statements: a holding statement, a transaction statement, and capital gain loss statement. This I'll be covering in detail in the subsequent slides. So these are primarily the main documents which you are required to obtain now. This is the time when we are actually entering the tax filing season, because 31st July is the last date. So I think so now your employers might be ready to give you Form 16. In first week of June, almost everyone gets Form 16, and other documents also you can just accumulate so that you are ready to file your income tax return. So just a small quiz, just to ensure that I'm able to explain all the points that we are covering. So the first question for you is, which ITR to file if you have? Scenario, we have given you 3 scenarios. Scenario 1 is salary plus listed shares gain and loss. So which ITR form you have to file? Okay, so someone is saying 2, maximum of you are saying 2, maximum of you are saying is 3. Someone has said ITR 1 also. Okay, okay. So 1, 2, and 3. Everyone is saying 1, 2, and 3. Someone has said 4 also. Okay, okay. Scenario 2. So wait for your answers for scenario 1. Scenario 2, salary and interest income. Okay, so majority of you are saying ITR 1. Okay. Scenario 3, salary plus this employee has also some ESOPs which the employer has given, and he has also speculative gain. So which ITR form to file for scenario 3 now? Okay, so majority of you are saying ITR 3. Someone has said ITR 4 also. So let's go to the next slide for the answers. So scenario 1, ITR 2 is applicable. Some of you, majority of you said ITR 2, but some of you also said ITR 1 and ITR 3. I'll explain why ITR 1 is not there, because listed shares and gain loss, which means you're selling you're earning some income out of listed shares on the stock market. So which is a capital gain or a capital loss. So in that case, you cannot file ITR 1. And since you do not have any income from business or profession, then ITR 3 is also not needed. So then ITR 2 is the answer. That's why ITR 1 and 3 is not there. Scenario 2, I only have salary and interest income. I do not have any other income. So simple, I am a sorted person. ITR 1 is good to go. Scenario 3, I have speculative gain also. I have ESOPs also, and I have salary also. Due to speculative gain, it is deemed business. Hence ITR 3. Okay. So this is a very random question which I have put in. So I have not discussed about this, but I wanted just how many of you know that if you do not disclose your foreign assets, if you have a foreign asset and you do not disclose it in your income tax return, what implication it has? So I have given 4 options: penalty of 10 lakhs, you have to pay tax on the income, or there's no implication, or both A and B, penalty also and tax also. Don't you think the penalty of 10 lakh is too high? Okay, someone is saying no, the penalty is not high. Okay. Okay, so we have mixed responses. So the answer is both A and B. So there's specifically a law known as black money law in India, which talks about foreign assets disclosure. And if you do not disclose your foreign assets, even it can be even as small as 1,000 rupee in your bank account in foreign country. Or it can be as low as that you are just a signatory in a bank account, or you just hold a demat account, or you just hold 1 share of Google. Then also, if you've not disclosed that foreign asset, as per the provisions of law, a penalty of 10 lakhs can be levied on you. Plus, if there is any foreign income which you have not disclosed, then obviously tax on that undisclosed asset will also be recovered. So the answer is both A and B. Now I come to the most important aspect of my presentation, wherein we'll be covering the analysis of the bank statement and analysis of the capital gain loss statements. Srinath, Akshat, wherever you want me to stop and cover the questions, just let me know, because I'm just going with the flow.
Sure.
Okay. So analysis of bank statements. Most of the people who are working, who are salaried people, they feel that Form 16 is sufficient to file the income tax return. The answer is no, because Form 16 only give you details of whatever salary you have earned, what all deductions are available. It doesn't give you details of any other income, any other expense that you have incurred, which is important to file your income tax return. So it is very important to analyze all your bank statements. Whether you have 3 banks, 4 banks, 10 banks, whatever number of banks you have, it is very important to analyze your bank statements, all the bank statements for the entire year. India follows financial year, that is from 1st April to 31st March, and you file your income tax return for 1st April to 31st March. So whenever you're filing your income tax return, whatever banks you have your bank account with, you have to generate a statement for that financial year from 1st April to 31st March. Like we are right now in financial year 20 to 23, for which we will be filing the income tax return. So you have to generate the bank statement from 1st April 22 to 31st March 2023. That is the period for which you are filing the income tax return for. And for the purpose of income tax return, this financial year is referred to as assessment year 23-24. That is for the income tax purpose. So why these bank statements are important? The bank statements are important because whatever income you are earning out of your savings bank account, suppose you are having a huge balance or some small balance also in your bank account. So normally banks credit you interest on your savings account. So that interest on saving accounts, you will not get into your Form 16. That is also your income. So that figure you will be able to get only from a bank statement, or if you get an interest certificate from bank for your interest earned on savings account. So you have to take your bank statement, look at what interest is being given by the banker. In some banks, interest is credited monthly. In some banks, interest is credited quarterly. So that statement you have to analyze and take your interest, all for 4-quarter interest or monthly 12 interest, and total it up and include as a part of your computation of income, which you'll be using to file your income tax return. Second aspect, which you do not get into your Form 16, is your dividend income. Suppose you hold shares of lot of listed clients, Reliance, Tata, Mahindra and Mahindra, TCS, and XYZ, more number of shares. So normally dividend is declared and you get dividend in your bank account. So that dividend also is your income. You have to disclose that amount also in your income tax return and pay tax on it. So all that dividend comes in your bank account, see the credit side, analyze it, take the interest on saving accounts, take the dividend. Then there's a possibility that you are receiving an income tax refund. So suppose you filed your income tax, there was a question that 30% was deducted and it was not applicable, how to get that back. Suppose your income tax refund was 10,000 rupees and you received it after 6 months. So the income tax, the department gives you interest on your refund at the rate of 6%. Suppose that interest is, let's say, 1,000 rupees and you have received 11,000 in your bank account. So 10,000 was the principal, not taxable, but 1,000 interest that the income tax department has given you, that is an interest on the income tax refund. That is your income, which the government has given you. You have to include that as a part of your computation and then file the income tax return. That is your income and you have to consider that while filing your income tax return. So these are primarily the 3 things which are common for people. Apart from that, when you take your bank statement, analyze the entire credit side. So what all you have to look at your credit side, your interest on saving accounts, interest on FDs, dividend, you have to see the interest on the income tax refund. Then if you sold any share, so the sale proceeds on the sale of the share or the sale proceeds on redemption of mutual fund will come in your bank account. Sometimes you sell the shares, you sell your mutual fund, but you don't remember it by filing the income tax return. It is with the help of this analysis of bank statement that you'll be able to see that, yes, you sold some share in the month of May. You're filing the return in next June. So you will actually forget. So from the bank statement, you'll be able to identify that, yes, you sold some share and that you need to consider while filing the income tax return. So whatever is the redemption amount, less cost, whatever is the gain, you have to include that in your income tax return. And even if it is a loss, then also you should file that in income tax return because that loss can be adjusted against any other future income. So it is very important to include loss also and profit also. Then I have talked about credit. Then what about debits? So in debits, normally we say you should analyze your debits also. So debits do not have any income, but they have a lot of things which can help you take benefit while you're filing the income tax return. Like you contributed some amount to PPF, like you paid some life insurance premium, you paid medical insurance. So you don't remember all these things unless and until you check your bank statement that what all contributions you have made. You made a donation. When you're checking your debits, you are able to analyze, yes, I made a donation last year. So you will obtain a 80G receipt from that particular institution and you can claim that in an income tax return. So it is very important to analyze your debits also, that where has the money gone, which you can utilize in reducing your taxes, taking a benefit as exemption or a deduction. So it is very important to analyze the credits as well as the debits. Any other credit related transaction, I've talked about everything, interest, dividend, anything. Apart from that, we also advise that whatever income you are receiving in your bank account as salaried income, so you should total that up and you should also match that income received in your bank account. So in your bank account, normally you receive, suppose your salary is 12 lakh rupees per annum. And for the purpose of example, I assume that 20,000 rupees is per month deducted, 10,000 rupees per month is deducted, that's TDS. So for the year, 1,20,000 is deducted as TDS. So in a year, when you will total up your salary as a credit in your bank account, you will receive that your amount should be 12 lakh minus 1,20,000 TDS, which is 10,60,000 should be the amount that you should have received in your bank account. If it is less or if it is more, then you need to check why it is less or more. Whether if it is more because of a bonus or it is because of a reimbursement. If it is less, then whether there were any certain deductions, you had taken extra leave. If you are not able to identify the reason, go ahead and discuss it with your HR and find out why there is a difference. So it is very important to match what salary you have received with your Form 60, whether it is credited correctly or not. And this way you will also be able to match the TDS that the employer has deducted has properly taken into account or not. Now, this is applicable for non-resident. The next point, that if you're a non-resident, non-residents are normally having two bank accounts. One is NRO account and one is NRE account. So NRE account, whatever interest is earned in NRE account is not taxable in India, and whatever interest is earned in NRO account is taxable. So analyze the bank statements, take the interest properly, identify whether it is an NRO or NRE. Even if NRE interest is exempt, even the exempt interest has to be disclosed in the income tax return. Having said this, another important thing for all the salaried individuals and other individuals also who are doing provident fund contribution, that the amount which we contribute to provident fund account, there is an interest that gets credited to us annually. That interest is not taxable, it is exempt. So that exempt interest should also be shown under Schedule EI, which stands for Schedule Exempt Income in your income tax return. That amount of interest should also be disclosed. So any questions regarding the analysis of the bank account? And if you have, we can take up that. And then I'll move to the another important part of the presentation, that is analysis of capital gain and loss statements.
Yeah, so there are a couple of questions on this on the chat. One is dividends from shares credited to our bank account automatically getting captured in the ITR?
Sorry, is
Dividend
it in
from
Q&A
shares.
or chat?
It's in the chat. Mr. Praveen Kumar has asked that.
Is the dividends from shares credited to our bank account automatically gets captured in the ITR? Sir, yes, it automatically now with the latest AI technology, once you're filing your ITR 1 or other ITRs, there are figures which gets auto-populated in the income tax return. But we have seen that there are some discrepancies in the figures which gets auto-populated. So it is always good to check from your income statements which you get from the broker, as well as your bank statement, to verify that the figures match. But yes, the answer, your question is right. Yes, it gets auto-populated.
Yeah, and next one also.
What if we have borrowed the from someone that also shows an account statement, but that is not income? Do we need to consider that also in ITR? No, if you have borrowed some money from a person, that is a liability, that is not an income, no treatment in income tax return. Another question, if we holding multiple banks, then we have to submit all bank statements. So you do not submit the bank statements anywhere. You have to analyze all the bank statements, whether you have 1 account or 10 accounts, analyze all the bank statements for your income as well as for your deductions. And you have to take into account all the income while filing the income tax return. But yes, one more important thing, all the bank accounts which you have to disclose the number and the name and the IFSC code in your income tax return. Only the dormant accounts need not be reported. Otherwise, you have to mention the details of all your bank accounts. Bank statements are not submitted while filing the income tax return. No document is attached with the income tax return. Will the leave encashment comes under tax? Okay, so this is a detailed topic. I don't think so we have time to cover that, and we are not covering it that. Maybe I will try and take this question in the end because it's already 4:15 and we have to do the walkthrough also. Do we get income tax benefit for home loan of under construction house? Yes, we do get that. We had covered how and how much you can get in the January session. This also I can again cover in the end if time permits. If home loan is there and family is staying, but I stay on rent, can I claim both home loan benefit and HRA? The answer is yes, if you're staying in different cities. Suppose your family is staying in Chennai and you are posted in Delhi. The answer is yes, you can claim HRA also and home loan also. Mutual fund redemption tax gets deducted is automatically while selling. The need to add this in form while filing. I could not get this. Mutual fund redemption gets automatically. Please rewrite your question. Dividend on share is taxable. Yes, it is taxable. How much minimum dividend or maximum dividend received? There is no minimum or maximum amount. Even if you receive 500 rupees, that is taxable and has to be shown under income. But obviously, you will get a basic exemption limit. So if you do not have any other income and you've just earned a dividend of, let's say, 1 lakh rupees, then there is no tax. What if? Yeah.
I know a lot of questions are coming up, but I think let's cover the remaining part first, because
Yeah, I think so. I'll cover the questions later on because there's a lot of questions.
Correct, and
Yeah.
a lot of them will get covered in the subsequent slides. So then
Yes.
maybe we can come back to it.
Maybe I think so. We can cover our presentation and then I'll take the balance questions.
Yeah.
Okay. The next thing is what is capital gain and loss? So I've explained all these assets like your residential property, your shares, your mutual funds, these are referred to as capital asset. And when you sell them, you either incur a profit or loss. So that is referred to, selling of capital asset is referred to as, and profit earned on or loss earned on that is known as capital gain or capital loss. Now, what is indexation? Indexation is a very, very important thing which is used to calculate taxes, especially in cases where you are having wherein you hold the asset for a longer period of time, and it is referred to as long-term asset. So indexation is a concept wherein there are cost inflation index numbers being notified by the government, and your cost is being adjusted in a manner to give effect and increase that cost to a level to give effect of the inflation. For example, I purchased a property in 2004 and I am selling that property in 2023. So the inflation, something I was able to buy for 100 rupees in 2004, I cannot buy the same thing today in 2023 for 100 rupees because of the inflation. So same way, whatever assets I purchased in 2004 and I am selling in 2023, the CII notified rates give effect of the inflation, and my cost is increased to an extent to give effect of the inflation. So this concept of adjusted cost on account of inflation by using the CII rates is referred to as indexation, and this indexation concept is being used to calculate the capital gain whenever you hold an asset for a longer period of time for your long-term holding period assets. So normally there are three types of assets which are commonly used. One is shares, one is mutual funds, and one is real estate. So whenever you sell this or you buy this or you receive a dividend, so you are either incurring a profit, you are either incurring a loss, or you are earning a dividend, or there are bonds or sovereign gold bonds on which you earn interest. So these are the four types of things which happens: profit, loss, dividend, or interest. So these are the four things which happens with the capital assets. So if you have let's say if you have equity shares and mutual funds, what all statements you have to obtain while filing the income tax return? So number one statement which you have to obtain is the holding statement. Number two statement is the transaction statement. And number three statement is a capital gain loss statement. And if you have a property sale, then obviously you have if you're selling a property, then you need to have the purchase deed and the sale deed so that you can sale minus purchase, adjust it for inflation, and then you get the profit. But for this purpose, for the presentation purpose, I'll discuss more on the equity and the mutual fund aspect. So what does these three statements are used for? So whenever you're filing your income tax return and any individual has any equity shares or mutual funds, just obtain these three statements with the help of your relationship manager, or you can even download it on your own from the relevant site. The first statement is capital gain statement. This statement is important because this statement will reflect the amount of profit or loss you've earned on the sale of these shares or mutual funds. So it will give you the details: how much was their sale price, how much was the cost, and how much profit or loss you've earned. So this is the main thing which you will use to file your income tax return. And it also gives you detail whether it is a short-term profit or a long-term profit, because if it is a short-term or a long-term, the rate of tax varies in the type of profit. The second statement is holding statement. This statement actually gives you holding, what you hold at a particular date. So normally when you're filing your income tax return, you should obtain your holding statement of 1st April and you should obtain the holding statement of 31st of March, which means for 20 to 23, obtain holding statement as on 1st April 2022 and the holding statement as on 31st March 2023. With the help of this, you can analyze that what was there on the day 1 and what is there on the day on the last date. So this is normally used to analyze that what all movement has happened in each stock. And the third statement is transaction statement. This gives details of all the transactions that you have done during the year, whether it is sale, whether it is purchase, whether it is dividend, or whether it is any interest on bond. So it gives you all the details, whatever has happened. To explain it in a better manner, I will just open some sample statements to show you how these 3 statements look like. So first I'll show you this transaction statement. My screen is visible? Can someone confirm my screen?
Yes, Asta.
Okay, so this is a sample transaction statement wherein you can see that the instrument name is coming, Direct Equity Chemicals. This particular client has Savita Oil Technologies Limited share, and on these dates there is purchase also, sell also, dividend also. Then Sirka Paints, there is only purchase, no sale. Then Hinduja, there is a purchase, there is a sale, there is a dividend. I even got bonus. So this statement actually gives you a bird view of what all transactions have happened during the year. What is the quantity, what is the rate, what is the amount, how much STT and stamp duty has been paid. So from this statement, you are able to understand what all transactions have happened, and this will help you calculate your taxes in a better manner. The second statement which is used is capital gain statement, most important statement, from where you are able to find out how much is the profit and how much is the loss. So if you see, it looks like this. It gives you the name of the purchase date, the sale date. From this, you're able to calculate whether it is a short term or a long term, depending upon the type of asset. Then it also gives you the purchase rate, the quantity, the sell rate, and the total cost, and the total sale value. And since it is within a year, so then it is a short term, and it is giving that on DLF Limited, I've earned a profit of 1,36,840. So like this, it is giving details of all the shares. And I'm able to pick that, yes, during the year, I've earned a profit of 19,65,000, which I have to report in my income tax return. But whenever you get these statements from your relationship managers, I normally suggest all my clients to do the calculation again, because sometimes in 1 or 2% cases, these statements also give some wrong profits being disclosed. That is sale minus cost. This figure, the short term, the profit figure is shown incorrect. So it is always better to recheck and do the mathematics again. Quantity multiplied by purchase rate, quantity multiplied by the sale rate, subtract both the values and find out whether it is a loss or profit, and match it with this figure. And if it does not match, please talk to your relationship manager and get the revised statement in hand. So this is the second statement which you need to analyze and report your profit. The third statement, holding statement. This is actually giving me a bird view of how many shares I hold, and as at the closing date, as on the 31st of March. So I am able to analyze that what movement had happened, and based on the transaction statement, I am able to check that what all holding I have. In a scenario where you are a person whose income is more than 50 lakh rupees, then he is obliged to declare his assets and liabilities also in the balance sheet. So for those individuals, this particular statement is very, very important, because from here you will be able to take the figure of the assets that you hold in equity, and you will be able to disclose the value in the income tax return under the Schedule AL, that is asset liability schedule. So these are the 3 statements which are very important while you are doing the capital gain loss thing. So taxation, obviously, taxation actually depends upon the form of what are the form of the equity shares, equity oriented units. what is the holding period, and because the type and the duration plays an important role in what will be the tax rate on that particular capital gain or loss. This aspect I'll just run through quickly. This aspect we had done in the January session, but I have again included it just to give an idea. So what is a long-term asset and what is a short-term asset, because some of you were not part of the January session. If you are selling, if you hold any equity shares, equity oriented mutual funds which are listed, so listed equity shares and equity oriented mutual funds, so then if it is a long-term asset, then your gains up to an amount of 1 lakh is exempt, and beyond that is taxable at the rate of 10%, and there is no indexation available in case of listed shares. And if it is a short term, if you're holding for a period of less than 1 year, then this listed equity shares are referred to as short term. Then the tax rate is not 10%, but it is 15%. And if your shares are unlisted, then your duration is referred to as 24 months. So if more than 24 months, then long term, less than 24 months, short term. Then, and if it is a debt oriented mutual fund or any other asset, then the holding period is 3 years. More than 3 years, long term. Less than 3 years, short term. If it is long term, it is taxed at 20% with indexation. You will get the benefit of inflation. And if it is not long term, if it is short term, then it is taxed at slab rates, whatever slab you're falling, 10%, 15%, 20, 25, 30. If you're in a new regime, old regime, 10, 30, whatever slab rate you are falling. So this is regarding the adjustment of losses. I think so we had a question also on this, that whether a loss can be adjusted with the profit. So these are the conditions for the adjustment. A short-term capital gain can be adjusted with short-term capital loss. A long-term capital gain can be adjusted with short-term capital loss. A long-term capital gain can be adjusted with long-term capital gain loss. There's only one thing: a short-term capital gain cannot be adjusted with long-term capital loss. There's only one restriction. And if you're not able to adjust in this year, you can obviously carry it forward it to subsequent years, and this carried forward can be carried forward, and it can be adjusted for a period of 8 years. But to claim all these losses, you have to ensure that you are filing return on time. You have to file the income tax returns before the due date. And these capital gains cannot be set off against any other head of income. Like if you are incurring a capital loss, it cannot be adjusted with salary income or house property income or with other sources income. It has to be within the capital gain and loss only. So capital gain section only. So this is a small activity which we had included, how to get your capital gain loss statement. So we had originally planned that all of you also can do with us, but I think so we are just left with half an hour. So I'll quickly try and do it on my own and show it to you that how it is being done. Srinath, my screen is visible. This Google is visible.
Yes, yes, sir.
Okay. So whenever you're trying to fetch a mutual fund or a share statement, you just type this CAMS online and just Google it. Okay. So you'll come to the screen. So what you have to do this CAMS plus K Fintech. So all your mutual funds and other details you'll be able to get from here. Whether you want a summary or a detailed statement. If I want a detailed statement, I'll click on detail. Then which period you want. So I want a specific period. You can enter from any period from 1st April 22 to 31st March 23. So you can enter that period. Then you have to put in your registered email ID. So I'll put my registered email ID here. Then PAN is obviously optional. Password I'll set and I'll confirm the password. And then if I'll have to create a password. Then if I submit it, the statement comes in my mailbox, which gives a detail of all the mutual funds, what all transactions are there and what all holding is there. So through this, you are able to have the entire mutual funds, what all has happened in that particular year in your mailbox. You'll get a detailed statement. So maybe this activity, once we've completed the session, you can do it. And if there are any queries, we are always there to help you. So we have covered this part, reading a capital gain loss statement. So This is normally how the capital gain loss statement comes. And if you see the extreme right column, realized gain and loss, it shows what is the short term and what is the long term gain or loss. So if you see, the losses are also coming and the short profits are also coming. So I think so we've covered the next part also. Now I will go to Form 16 and versus Form 26AS. So this is another important thing which is very, very important actually when you're filing your income tax return. Form 16 is the form which you get from your employer. I've already explained it has two parts, Part A as well as Part B. And Form 26AS is the form which you download from the income tax portal. So this is how typically a Form 16 looks like. I'll just open a sample Form 16 in front of you also. So this is how a typical Form 16 comes. I've just removed the details for the purpose of confidentiality for the sample employer. So this is the Part A. Part A gives details of your employer. It gives your details and it gives details of the PAN and TAN of the deductor, which means your employer, and the PAN of the employee. It then shows that for which period it is. Period with employer, April 20 to 21. You have to now take it from April 22 to March 23. And the assessment year will be 23-24. So this particular form shows that how much income I want. So this particular salaried person has earned an income of 8,78,400 during the year from this employer, and on that 36,000 rupees tax has been deducted and deposited by the employer. So the Part A shows only the amount of income, amount of salary income, how much is tax deducted and how much is the tax deposited. And below down it shows the details of the challan and the dates by which the employer has deposited your TDS. Now we go to Part B. This is the most important part which you need to file your, which is needed to file your income tax return. So herein the salary is being shown, like the salary is 8,78,400. Then a standard deduction of 50,000 is given by the employer. Then there is a house property loss, which I have given to the employer. So he has considered that. House property loss is the typical loss which is allowed to be set off with salary income. That is the only loss which is allowed to be set off with salary income with a maximum limit of 2 lakh rupees. So this employee has actually given this loss so that the employer is aware of this figure and lower TDS is being deducted by the employer. So if you see earlier he had an income of 8,20,400. Due to this information submitted to the employer, it is being reduced to 7,26,737. Then he has also given details of ATC 1,50,000. That deduction is there, and on that basis the employer has calculated the tax and it is shown as 28,962. But the employer has deducted a higher TDS of 36,000. So when we filed his income tax return, we claimed the balance as a refund. So this is how typically a Form 16 comes, and how you have to read it and use it for an income tax return. So from all these things, you have to pick up the figures and put in your income tax return form. The second thing is 26AS. This is 26AS. I'll open 26AS also to show and quickly explain it. So this is how a 26AS form looks like, which is being extracted from the income tax portal. It is being extracted by going to your login credentials on the income tax website, and from that you are able to generate this for every year. So these details are removed, otherwise your name and your address comes, and it shows that how much income you've earned. So if you see, I've removed the name of the employer, otherwise the name of employer will also come. So it shows that an income of 8,78,400 has been earned and 36,000 TDS is there. So in this case, the Form 16 and 26AS is matching. But it has been noticed in some cases that there are scenarios that the Form 16 and the amount in Form 26AS do not match. So it is very important when you are filing your income tax return to match your bank statement with your Form 16 with your 26AS. And if they do not match, you have to see why is it not matching, speak to your employer and ensure that it is corrected. So you have to have, so from this 26AS, you are able to see that apart from the salary income is also some income from Zerodha of 567. on which 43 rupees TDS has been deducted. So when you're filing a return, you have to consider this 567 also in addition to the salary. Apart from that, there is also a property that was there that he had purchased. So on that transaction amount, a TDS was being deposited by him. So these details also come in. Suppose you have sold a property, you have purchased a property or not, and on that TDS is there, or you have purchased a vehicle, on that TCS is being collected by the party. So all those details will come here in form 26A, which you will utilize to file your income tax return. So from here, you'll be able to pick up this TDS figure and claim your income tax return. If you have some TCS, then you're able to pick that TCS figure from your 26S and claim that. Another thing, if you have an income tax refund, then this is the part D, details of paid refund, wherein the details of your income tax refund appears, and also the interest portion. See this column, interest portion comes. So amount of refund will come as total 11,000. In my example, 10,000 was the principal and 1,000 was the refund. So amount of refund 11,000, interest amount 1,000, and it will also show date of payment and some remarks if there. So from here, you are also able to see that if any income tax refund has come and any interest is there, so you have to consider that interest in your computation while filing your income tax return. This we have covered. These are the things that is being reflected in 26AS. In case of sale of immovable property, in case of TCS, it comes like this, any tax paid. So what is an AIS and a TIS? So AIS and TIS is a special annual information statement and a taxpayer information summary, which has recently been launched by the income tax department, which gives a summarized, AIS gives a summarized comprehensive view and TIS gives a summarized view. So AIS gives a comprehensive view of what all financial transactions you have done, whether it is a salary, whether it is a purchase of a mutual fund, whether it is a sale of mutual fund, and taxpayer gives, TIS gives a summarized view. So all these, both the statements can be downloaded by logging into your income tax portal. Also, recently the income tax department has launched an app also wherein you can access your AIS. It is referred to AIS. You can just download that app, put in your PAN number and your mobile number and other details, and you can view your AIS as well as TIS on your mobile phone itself if you're not able to log in or extract it. So I'll just quickly show you how this AIS and TIS looks like. This is typically how an AIS statement will look like for obviously all the details will be appearing. So here, there's some other clients, all the details have been hidden. So this is a salary received he was earning in Ernst & Young, and a salary of 1 crore he was earning. So detailed of quarter-wise salary was coming. This is the AIS statement. Then he had also received some dividend from DLF Limited of 500 rupees. That detail was coming. Then there was a savings bank interest of 8603 that is coming. Then he had also sold some mutual funds of 35,000. That detail was coming. Then he had paid some income tax of 6,22,000 and also TDS on rent of property also 12,000. So all the details are coming. So it is not only showing your income details or your expenditure details, whatever financial transactions you have done in a year, in that particular financial year, all are there. So whenever you're filing your income tax return, it is very important to download these statements and see whether while preparing your income tax return form, you have not missed on any details which needs to be considered in the income tax return form. Because this is the information available with the income tax department. Suppose if you miss this information to be included in the income tax return, then you are yourself inviting an income tax notice to your house. Suppose this individual has sold a mutual fund of 35,000 and he forgets and he doesn't take care of it and he doesn't disclose that in income tax return, or he doesn't disclose a dividend income or interest income, then this individual is bound to receive an income tax notice. So better take precaution rather than be sorry after receiving income tax notice. You have to pay interest also, you have to pay penalty also, then other repercussions come. So it is always better to analyze all the data at once and put in your income tax return to avoid any income tax notice or any inquiry from them. Another important statement is the TIS statement. It's a summary of the AIS statement. So normally the AIS and the TIS match. It's just a summary of the information. It's giving all the things in a concise way that how much is the value. Now there can be questions that this particular AIS and TIS is also showing dividend and interest income. So why to analyze the bank statements? Because it has been seen while doing income tax returns for so many clients that the information available with the income tax department can be sometimes be not fully correct. Because we have seen that suppose this in the case of this individual, the interest amount is showing as 8603, but he had actually earned an interest of rupees 15,000, or there can be a scenario he had actually earned an interest of only 8,000. So some matching thing can occur, but this can be a very good statements to see if any value has been missed out. So you have to actually check your bank statements, your form 16, your 26AS, your AIS, your TIS, your capital gain loss, all the 3 statements. And then after carefully analyzing all these statements, you have to prepare a computation of income in Excel. And on that basis, select which ITR form you have to fill and then fill up your ITR form and file the ITR. So that is the entire process as to how you should file your income tax return. So these are the steps how you can download the form 26AS. We'll share the presentation, and maybe after the presentation, you can try to log in and download your form 26AS. And if there is any problem, you can obviously connect with us. Now, what are the important disclosures that you have to do in your income tax return? So number 1, obviously, I think so all of you must be aware, you have to link your Aadhaar number with your PAN number. So you have to put in your Aadhaar number. If your Aadhaar number is linked with PAN number, your e-verification of the income tax returns also become very easy. Your details of employer have to be entered in your income tax return. Then details of TDS deducted from salary also have to be entered in your income tax return. That is evident in form 26AS. If you are a partner in any partnership firm, that detail has to be entered. If you are a director in any company, that detail has to be entered. If you hold any foreign assets, please fill up that, because there's a very heavy penalty. Details of all foreign assets have to be filed in income tax return. All the bank accounts have to be disclosed, and the number and the IFSC code and the name of the bank has to be entered. Dormant bank accounts can be left. Details of all the unlisted shares have to be entered. Details of all assets and liabilities have to be entered if your income is more than 50 lakhs. And in case you are a non-resident, then you have to also enter the number of days that you've stayed in India. So these are some important disclosures which I have put down here for the benefit of all to know that these are very important disclosures that you should do in your income tax return. Now we come to the last aspect of the presentation, that is the walkthrough of ITR. And we are left with 15 minutes. So Akshat, I think so we should quickly do the walkthrough and then we can take the questions, or how do you want us to do?
I think that will be perfect. We can finish the walkthrough and then take the questions.
Okay, perfect. So now we'll be doing a detailed walkthrough of ITR 1. And for that, I have prepared a sample computation. Is the computation visible?
Yeah, Asta, go ahead.
Increase
Okay.
the size.
Okay, so this is the computation which we have prepared. This is a sample computation which we have just taken, that this employee is earning a 14,16,495 as a salary, and he's able to claim HRA benefit of 169,175 based on the calculation as per this formula. And then he has some standard deduction of 50,000. Then he has some interest from income tax refund. Then he has savings bank interest, and he has some small dividend income. Then he's able to take a benefit of ATC, 1,50,000. Then 25,000 ATD. and some 80 TTA benefit. So he had interest of, let's say, 12,000. Out of this 12,000, he has got a benefit of 10,000 and only balance 2,000 is taxable. So first of all, we'll see which regime is beneficial. So we have done a calculation. So as per the old regime, 1,25,334 is coming out to be payable. And as per the new regime, 1,73,289 is coming out to be payable. So obviously in this particular scenario, we'll go for old regime being beneficial and less tax payable. So now I'll just stop share and quickly log into the portal, and then I'll again share the screen to show you how you have to fill up your ITR1. So this is the portal wherein you have to go. You have to just type e-filing. You go to the site www.incometax.gov.in. You click on this, then you click on login. So here I have to enter the details. So for this, I'll again do stop share. So this is how it will come. You have to go to e-file, income tax returns, file income tax return. Then I have to select the assessment year. I am doing for assessment year 23-24, which means for financial year 21-20, which means for financial year 22-23. I'm doing an online mode. You can do an offline mode also, wherein a JSON utility is being downloaded, wherein you fill the ITR form and then you upload that JSON utility. So I'm opting for an online form. Then you click on continue. Then I'll say start new filing. I'm an individual. I'll select it on individual, continue. Then it says, I know which ITR form I need to file. Select ITR form. I am a salaried person and I only have some interest and dividend income and some ATC and ATD deductions. So ITR 1 is applicable to me. I'll say proceed with ITR 1. Then I'll say, let's get started. Now it says, are you filing the income tax return for any of the following reasons? So my main reason is this: taxable income is more than basic exemption limit because my income is around 12 lakh rupees, 14 lakh rupees before deductions. So my income is more than 2,50,000. So I am going for this. Income is more than basic exemption limit. Otherwise, if you are filing it for any other reason, like your aggregate, suppose this is there, your aggregate income, your travel to foreign country, your expenditure is more than 2 lakhs, electricity 1 lakh, or you have to file for any of the conditions that we had discussed, then you have to click on this. Or if you are filing the income tax return optional or for any other reason, then you have to click on others. So my reason is this. I will just click on this and I'll say continue. So normally you will see that when you are doing ITR1, there are figures that become as pre-filled in your income tax return. So in my thing also, it is coming out to be pre-filled. So I'll just say okay. So now this is how it looks like, and I have to complete all these schedules. So I'll quickly go to personal information. So here your personal information will come. Now I'll say nature of employment. So nature of employment minus others because I am doing private job. Then 139.1, I'm filing the return on time. Then here it asks for, are you opting for new tax regime under 115 BAC? So for me, as per my calculation, old regime is coming out to be beneficial. So I will say no. So these are all the bank accounts. So 3 bank accounts, it's already there with the available with on the record of the department. If you have opened a new bank account or it is not coming here, you just select add another and you put in that detail. Then I'll say confirm. So first portion is done. Then I go to the next portion, wherein I have to put in the details of my deductions and my salary. So this is how the questions come. My screen is visible and properly visible now, or should I zoom it more?
It is clear, Rasta.
Okay, perfect. So this is how the next portion of the return comes. It talks about, are you eligible to claim exemption in respect of expenditure incurred on cost of travel on tour or transfer, maintenance of uniform, etc. So if your employer has given any such benefit and you are claiming an exemption either on account of cost of travel or on account of maintenance of uniform, then you say yes, otherwise I say no. So in my case, it is not there, so I say no. Then are you eligible to claim exemption in respect of special compensatory allowance, children education allowance, hostel allowance, etc.? So if you have any of this like children education or hostel expenditure allowance, you say yes, otherwise you say no. In my case, it is not there. I think so it's not there. I'll just check also. So yes, I do not have this. I just have HRA. Children allowance I do not have, so I'll say no. Then, are you eligible to claim exemption in respect of house rent allowance? I say yes. Then it asks me, please provide the amount of to be claimed as exemption. So for this, I go back to my computation. I see how much is the exemption amount, 169,175. So I'll go here and I'll just put in 169,175. Then, are you eligible to claim exemption in respect of LTA? I go back to my computation. Okay, so I have some LTA, but in this year, I am not claiming any LTA as exemption. So I'll say no. Then, are you eligible to claim any other exemption from salary income? I just have HRA, so I'll say no. Then continue. Now it says that we have pre-filled this value from a form 16 AIS wherever applicable. So now you have to check these details whether the department has filled the data correctly or not. So I will see. He's showing me gross salary of 14,16,495. So I'll go back. What is my salary? Oh, it's correct. 14,16,491. So I will not change it. If there is a need to change this figure, you have to press on this edit. And here you can change the figure. So this 1416 is correct. 169 I have just put in. Then standard deduction it is giving to me 50,000 rupees. So income under the head salaries is 1197,320. I go back to my computation and say whether it is matching. Yes, 1197,320. If there is any change, you have to just do edit and change in these particulars. Just change here. Then you say save. Then it says income from house property. So if I go back to here, I do not have any income from house property. For example, I had a loss. Let's say I can just assume here, I have a loss of 50,000 rupees, due to which my tax component has also reduced here. So now I have to put in this loss, which I forgot to give to my employer, but now I am claiming while I am filing the income tax return. So I will go there here and I'll say add / edit details of break. So it will say, I'll say on my self-occupied house, interest payable on borrowed capital. I've paid an interest of 50,000 rupees. And since I do not have any income, it is a self-occupied, I'll get a benefit of this interest. I'll say add. So see, this 50,000 income under chargeable under the head house property, this 50,000 loss is appearing. Now it says income from other sources. So it's saying interest from income tax refund. This is auto populated. I have not filled up anything. 2305. It is coming out to be 2305. Dividend income 87. It is showing 87, but it is not showing my interest from savings bank account. So what I'll do, I'll add another. Do you have interest income from saving banks account in India? Yes. How much interest I have? I have 12,000 rupees. And I'll just say continue. So this is completed. So now my gross total income is coming out to be 11,61,712. So I'll match it with my computation sheet. 11,61,712. So my gross total income here, it's matching, if you see. So this particular sheet we refer to as computation of income. So all of you should prepare this Excel sheet and then only file your income tax return. Now I say confirm because my putting income details is completed. Then I go to deductions. It says, are you eligible to claim any deduction for donation paid? I go back to my computation. I see I have only 80C and 80D and 80 TTA. So 3 deductions I have to put in. So claim deduction, no. Donation, no. Claim deduction under 80GG, no. Here it talks about 80C. I'll say yes. And I'll put 1,50,000. Then 80CCD, no. Then medical insurance 80D, yes. It says schedule 80D is required to be filled. We'll fill that later. Are you, as per information available with the department, you have made payment towards interest on loan? No. Interest on saving bank account? Yes. It says 80 TTA has to be filled. That we'll fill up. Are you eligible to claim any other deduction? No. We'll say continue. So 80C, it is taking as C. Amount of investment as per Form 16, it is automatically picked up 1,50,000. And now we have to enter 80 TTA detail. Add 80 TTA, that is interest on saving accounts. Interest is 12,000. It will automatically give me a deduction of 10,000. See, 10,000. Add. Because 10,000 is the amount of deduction which the income tax provisions have specified as a deduction that is available. Now, last thing which I have to add is medical insurance premium. Add 80D. So I go back to my computation. It is for self, spouse, and dependent children. So I go back to the income tax return form and I select. It says if you are an HUF, I'm not an HUF, so no. Self and family, health insurance, 25,000. So there are 2 columns, health insurance and preventive health checkup. So you have to put the medical insurance premium under health insurance for self and family. Whether any one of your parents is a senior citizen, no. So if your parents are senior citizens, then for parents you have to put in here. So eligible amount of deduction 25,000. Add. So total deductions are coming out to be 1,85,000. I go back to my computation to match it. So yes, it is 1,85,000. It's matched. I say confirm. So now I go to the last, second last schedule, taxes paid. It says details of tax deducted on source on salary, total 570. So it says total taxes paid is 570, which obviously detail I don't have in the computation. As per the computation, my amount 1,12,156 is coming as payable, and 5,70,000 already the taxes have been paid. So I say confirm, because this is the amount that the employer has deposited. Now total tax liability. So everything is matching. 11,61,712 is the GTI. Then deductions are 1,85,000. Total income is coming out to be 976. On that, tax of 1,12,156 is coming, and it is matching with my computation 1,12,156. So it is perfectly matching, and I say confirm. So I have successfully, see there's a thumbs up, you are done, click to proceed. I have completely filled up my ITR. I say proceed. It shows a purview and it shows that you are eligible for a refund of 4,57,980 because my employer has deducted higher tax. So I say preview return. So I have to just give a disclaimer, then self, and then proceed to review. So this is how my entire income tax return will look. And you can just review all the particulars to see that there are no errors. You can just have a look at it. If you want, you can print this form, have a look at it, and then only go in the end and proceed to validation. So when we go to validation, it says if there are any errors found. So it says that there are 2 errors which are found. Amount of gross salary declared is less than the amount of gross salary declared in TDS, and selection of either of the options. So there's some problems because I have changed the figures, because obviously this there's a high refund which is coming because the salary was more, but we had put in less details. So that's why it is showing this error. Once you remove these two errors, it says proceed to verification. And once you proceed to verification, you are able to file your return. So that's how it is done. I obviously cannot go ahead and file the return because I have to first fix this up, and I don't think so we have time that I show you how to fix this up also. So I think so I'll just stop here and I'll go back to my presentation. And I think so we'll have to stop here only. I think so because I think so to take the questions, it is more important rather than to cover the quiz at the other parts. So Akshat, should we take the questions now?
Yes, sure. So Asta will just take the screen sharing from you for a bit. So folks, what I also wanted to mention was, we'll just start taking the questions in just a second, but there was another thing. Just a second, Asta, I'm just taking up the screen sharing, right? So another thing that we wanted to share with all of you was, I hope you can see the slides, right? So now you all are aware that, there were some recent changes done by the union.
Akshat, the slide is not appearing. Your WhatsApp chat is appearing.
Very sorry.
Yeah, now it's fine. Yes.
I hope you didn't read my personal messages. Just kidding. Okay. So yes, folks, what I was saying is, I'm sure you all are aware that, recently there were some changes done by the union government in the budget, right? With respect to old regime versus new regime. Now, please remember that this year, when you file your ITRs, they will not be on the basis of the new changes, right? We are still filing ITRs for the previous financial year. And so they will all be done by the original rules that were earlier, right? Which Asta did share in beginning as well. But they'll be all done with the original rules that were done before. For those of you who want to watch the January tax planning session, you could do that once the recording link is shared, and you'll be able to get that as well. Now, what we've also done is, just so that you can prepare yourself even better for the upcoming financial year, right? With the new tax regime in place, with the changes in the new tax regime there. So what we've done is we've created a computation sheet for you. It's a very easy to understand, self module kind of a thing, which you can actually just look into it and go through it. I'm sharing the link of that Google spreadsheet on the chat. So, all of you can actually go to the link and create a copy of it, right? Don't start directly editing it, but create a copy. You could just go to file, make a copy, create a copy for your own, to take care of your personal information. And then you could utilize that in order to plan for your taxes for this next financial year, right? So yeah, this is what we made for you so that it makes it easier for you. Whatever salary that you are in, you just put it there, put in all the deductions that you can claim, and the tool at the end will share, whether the old versus new regime, which is beneficial for you, right? This is the kind of tool that we've just done. So this is the kind of tool that we've just shared with you. I see a lot of you already started accessing it. But yeah, please do remember to make a copy of it, right? So you just put in your salary there, the standard deduction, the taxable income, all the deductions that are there. And, at the end, it'll give you your final outcome in the old versus new regime. Cool. I hope this is helpful. And I hope that went smooth. We hope that, Asta was able to cover all the content that we had. And everything, and you will be able to now file your ITRs with ease, right? Okay, let's quickly do some quiz, and then we can take up your questions as well. In the meanwhile, I think Venkat has put up a feedback poll, so please do give us your feedback as well. Question time: what would happen if I do not file my ITR on time? Will the IT department send me a letter requesting to do so along with a box of chocolates? A late fee of 5,000, delay in refund plus high interest on outstanding amount, D, tax notices, E, B, C, and D. I think it's going to be A. My answer is A. Asta, in fact, we can also ask them to, send us some laddus also. I like laddus more than chocolates. Okay, A, D, B, C, all different modes. Okay, perfect. Yes, so B, C, and D is the right answer, which is in fact option E. Absolutely, most of you got it right. Okay, what is the annual exemption limit of long-term capital gain on sale of listed shares? What is the annual exemption limit of the long-term capital gain on the on sale of listed shares? Option A, 1 lakh. Option A. Yes, that is absolutely correct. Option A was the answer, right? And so, yep, that's what they say. Nothing is really quite as satisfying as the income tax refund. I know the example that Asta took, almost 4.5, 5 lakh rupees of tax refund. I wish that was my my ITR filing. I would already be planning parties now if I was getting a 5 lakh rupee refund on my ITR filing, right? Okay, yes.
Akshat, I was doing your return only. You can give party to all.
Yay. Thank you. Okay, so I know we wouldn't be able to take a group photo, but we have a special activity for you, which in fact can let you win a free tax filing, right? So if you want to get a free tax filing, we have a special activity for you. Listen to this carefully, right? So you could be one person in this entire, from all the participants to get an absolutely free one-on-one advisory come tax filing from Asta and Team Pennywise. What we've done is we've posted a LinkedIn post, right? We've just put up a post on LinkedIn. And what we've actually just put up, the experience that we had with sharing this, doing this workshop for all of you today. What I'd like you to do is take some time and be creative in telling us what was the unique key takeaway. Okay, be creative. You could play with words, or you could prepare a meme, or you could do you could maybe create some sort of an imagery representation. But it's basically anything which was a unique takeaway which you loved learning about in this session today. Please put that in the comments, right? And what we'll do is we'll ask all the participants to go through the comments when possible. And in fact, the team would also go through the comments. The comment that gets the maximum likes, will get a free tax filing from Team Pennywise. Clear? So here's a chance for all of for one of you to win a free tax filing this year. You could just put in the comment here with what was your unique key takeaway in the most creative fashion. In fact, I'll give you a small tip, right? Go ask your friends to like your comment. Okay, we take this offline. Okay, but yes, so the comment with the maximum likes gets a free tax filing from Team Pennywise. Okay, yeah, and for those of you who are not able to get the free tax filing, well, don't worry, we still have some very special offers for all of you. So yeah, if you at any time want any sort of a tax advisory or personalized income tax filing return for your own ITRs, you could ping us on the email ID there. I'll just put that in the chat as well. taxsolutions@pennywiseapp.in. Either you could drop us an email onto this, or you could drop us a WhatsApp message on the below number, and somebody from the team will get back to you. We have special rates, special discounted rates for all of you if you want to file your taxes with us, right? But irrespective of that, even if you have any questions at any time, feel free to put them in. We'd be more than happy to answer them over the email. Or what we also have is a community. So what we've done is, for those of you who've attended the Pennywise sessions before, we've created a WhatsApp community, a community over WhatsApp groups. And what we do is we actively participate. We keep sharing a lot of tips, tricks, information, anything and everything related to your personal finance, right from your money management to financial planning, to investments, to mutual funds, to tax advisories, tax planning. Everything is what is discussed on those communities. If any one of you want to join that community and be a part of the be a penny wiser, as we call it, feel free to access the link below. It'll take you to a WhatsApp group. And the intent of this community is to actually be involved, learn from each other's experiences, right? It's absolutely free. I do want to mention it's a lifetime free community. We'll never be asking you to pay money in order to be a part of that community. But what we want to really do is, as they say, tell me and I forget, teach me and I may remember, involve me and I learn. So tell me and I forget, this is what everyone always does. Teach me and I remember is what we've tried to do today. Involve me and I learn is what we want to do as part of that community. We want all of us to learn from each other's experiences, each other's mistakes, so on and so forth. And so that's why, this community is made up, right? So absolutely feel free to join us with that community. Okay, and yes, I think Venkat has already shared the feedback poll, so I hope you all did fill it. Do share us your feedback. If there's anything that you'd like us to improve on, you could always share it with the Ethica team, or you could share it with either of us directly. Yeah, the feedback poll is up again. Please do take a minute and fill in the feedback. Cool. Thank you so much, Emma. Thank you, Noah. We'll move on to questions. Srinath, Kushal, are there any questions that you've pointed out, or we can take them randomly? So 85 questions have been answered. Great work, team. Wow, that's a big number. So the first question is how to save all the tax.
All the tax. So that's a very good and a very difficult question at the same time. So obviously you'll have to listen to our January session, and obviously some tips I have given in this session, and do go and listen our January session, wherein I've given some tips to how to save tax. Obviously all the tax cannot be saved. All the tax can be saved only when you are below the basic exemption limit. The more the income, the higher the tax. So increase your income, don't worry about taxes. That's what I tell all my clients.
Yeah. Absolutely. And then, you have all the materials. We've also shared the new Excel tracker with you, which will help you plan your taxes for the next financial year. So, feel free to use that out.
So, Shreyansh, you were asking, please share the computation sheet. I think Akshat has shared one computation sheet that will serve your purpose for this year. And for the previous year, we'll be sharing with the PPT. You will get the computation sheet also. So I think there are no more questions in the question answers thing. Someone asked that, can we help in ITRs? Obviously, Akshat has covered that. We've given you the email ID and the mobile number, so you can get in touch with us and someone from our team will get back to you. I'll just see the chat also if there are more questions.
Sure. In fact, if any one of you have some additional questions, I think we can, unmute, promote you to the panel, and you can also ask your questions.
In that case, Akshat, if anybody want to ask any question, they can raise their hands so that we can move them to panel. They can ask their questions.
Someone asked in the chat, salary advance will attract TDS, Mr. Ramu. Yes, salary advance attracts TDS. So if it is a loan from the employer, then obviously it is not. But if it is in the shape of a salary which is getting adjusted automatically every month, so as and when it gets adjusted, it takes the shape of salary. So yes, at that point of time, it attracts TDS.
And Basil, if you can hear me, you can unmute yourself and you can ask.
So my question is, I had asked it in the question section. It was answered there, but just to reconfirm. So how are taxes calculated on, unvested options and RSUs? I have not sold it. It's just getting accumulated in my name. So I have not sold it at any point. But when I sell it, is it LTC, long-term capital gains, or is it something, like you said, speculative of that nature?
Okay, so in RSUs or in ESOPs, there are 4 stages. One is grant, then there is vesting, then there is exercise, and then there is sale. So if they are not vested, if they're unvested, then there is no tax at that level. The moment you
have both. Yeah, just to intervene, I have both vested as well as unvested, which I am currently vesting.
Okay, so till the time it is unvested, there is no tax implication. The moment it gets vest, so at that point of time, whatever is the fair market value of those shares, on that value, your employer deducts TDS on that, treating that
But
as your
it's my
perquisite, and
previous
that is
employer. But it's my previous employer. They have
I'm
not.
just allow me to complete my answer. You will
Yeah,
get answer to
sorry.
all your questions. I'm just answering all, so that if anyone else also has some query related to it, so all the answers get covered in it.
Yes.
So when it gets vested, your employer treat that value as perquisite based on the fair market value of the share, and on that TDS is deducted. So that value on which the employer is deducting TDS as perquisite becomes your cost. And when you sell those shares, so the difference between the date of exercise and the date of sale, that period you have to see. So if it is a listed share, then the period is 1 year or more than long term. And if it is an unlisted share, then if it is more than 2 years, then it becomes long term. So based on that, you have to determine whether it is long term or short term. The second stage comes when you sell it. So when you sell it based on long term or short term, the tax is being levied. Another question which you asked is whether this will be treated as speculative gain or no or not. No, the answer is no, it will not be treated as speculative gain. I
Understood.
hope I have
Thank you.
answered all the questions.
Yes. Thank you so much.
Yes.
We have one more raised hand. Ratnakala, if you can hear me, please unmute yourself and you can ask your question. Ratnakala. Ratnakala, you there?
Hi. Hello.
Yeah, please go ahead.
Yeah, actually haven't actually have donated some donation to the some side the foundation. So I need to file the tax return for that. So ITR 1 is applicable, right, to file that donation ATG certificate. Even I have that receipt also.
So you
So
have to ensure that you have the ATG receipt. If you have that, yes, you can go ahead and file the ITR.
okay, ITR 1 I can choose that option, right?
Yes.
So that link I don't have. Can you share that link to file?
Which link?
Income tax file return. Just now you have shown that portal.
Okay, that portal link. Okay.
Yeah.
I'll just put that on the chat. Just 1 minute.
Asta, I'll just put that.
Okay.
One more hand raised, Asta. Pritesh, if you can hear me, unmute yourself and you can ask your question. Pritesh.
Yeah, hello Asta, can you hear me?
Yeah, please go ahead, Pritesh.
Yeah. So I have a very like a very silly question. So last year I have somehow missed to file the ITR. Means I have completed. I have filled the file, but due to penalty, there was some amount of penalty. So I have missed to file that ITR. So what if I file the ITR for this year? Whether that would be considered, or how if I want to refile that ITR for the last year, how it will be proceeding? How it will work?
So to answer this, every year filing is separate. So when you file for financial year 22-23, that has no link with financial year 21-22. If you have missed to file, the last day to file income tax return, the belated return has also passed. But there's a new concept which the income tax department has introduced known as updated return. So even if you've not filed the income tax return, you can go ahead and file an updated return for financial year 21-22. But whatever tax liability is appearing, suppose you had to pay 10,000 rupees at tax, you'll end up paying 125% of 10,000 rupees. So whatever is your tax liability, you have to pay 125% of that tax liability. Another condition to file an updated return is that you should have some income, you should end up paying some tax. If your return is having refund, then you cannot file your updated return. Or you are claiming any loss, then you cannot file any updated return. So you can file an updated return if you have some tax payable. So you can pay 125% of your tax liability and you can go ahead and file your updated return.
So updated the tax file return will be done from there, that portal, same portal only.
Yes.
Okay. 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 Okay.
Yes.
Thank you. That's answer my question.
Thank you.
One last
Yes,
question.
Mr. Bansal.
Yeah, thank you, Asta and Akshat, for detail this one. My question is, me and my wife both are like joint owner of one of our property, and my wife is a homemaker, and we are getting rent on in her account only. So when I will file ITR return, so I need to show that as an income or not?
Yes, obviously you have to show it as that as an income. You are joint owners means that property is jointly registered in your and wife's name. But who had given the amount to purchase the property? Was it also joint?
No, I took loan on my name, and I have given the this investment completely. I have
Okay.
only given.
And is there any TDS deduction on the rental income that you are earning?
No.
There's no, the answer is no. So since you have contributed the entire amount to purchase that house, in spite of the fact that it is jointly owned, but since you have purchased the entire house, the entire rental income should be shown in your hand.
But that amount is coming in her account. So is it okay to not show in my ITR filing, or it is need to be show?
You're receiving the rent in her account.
Yeah, exactly. Actually, agreement
Is
is
she
done
also
between.
working? Is she
No, no,
working?
she's not working. She's not working.
So that income will be clubbed in your account. The clubbing provisions will attract, and that income will be clubbed in your income, and that you have to file income tax return accordingly.
So it comes under ITR 1 only, right?
So one house property, then ITR 1.
Okay, thanks a lot. Thank you so much.
Yes. Someone is saying me, can you show any sample copy of how income tax notices will look like? Sir, don't see the income tax notices unless and until you receive it. There is no fun seeing income tax notices. Please, Pritesh, ask. I think so you have one more question.
I think you can just Google, you'll find a lot of ITR.
Yeah, Asta, can you hear me?
Yes, I can.
So my question is again, actually I have posted in the chat message. What if I am having a 2 bank home loan account? Like I am serving 2 loans. How can that be adjusted?
What is the purpose of those 2 home loans?
I have 2 flats. One second, ma'am. Yeah. So I have 1 flat. It's already I've got the position. I'm serving a home loan for that, and I have already also purchased 1 more flat which is under construction, and for that also my home loan EMI has been started. So how can I,
one is under construction, the another flat which you've got the possession, are you staying in that flat?
No, not really. I will shift, I'm not staying over there.
And that was also an under constructed property that you purchased, or it was already constructed?
No, it's constructed. No, I've got the possession.
So you've got the possession. So on that under construction and the house in which you are living, it is an owned house or it is a rented property?
It's a rented house, rented property.
It is a rented property. So see, whatever interest you are paying on the under construction property will get accumulated, and whenever you will let out that flat, or in future you will be able to once the under construction property is completed, you will be able to claim that interest as a deduction, and that will amount to loss, and that loss will get registered with salary income. And the other flat, and the other flat on which the construction is not happening and you have got the possession, so I would suggest you that you should let out that property, and once you've let out that property, you will be able to claim a deduction of that interest, and out of the rental income you claim that deduction, and even if it results into loss, that will get registered with salary, because if you don't let it out, it will become difficult for you to claim that interest portion.
Okay, so you mean to say under construction I should go as a let out property?
I am saying that the property on the possession of which is completed and you've got that property, let out that property, earn rental income, and take that interest as a deduction of that. The second property, which is under construction property, till the time it is getting constructed, that interest you're paying will get accumulated. Once it is completed, that property,
Correct.
either you stay in that property as self-occupied, or I would suggest that you let out that property also. When you let out that property out of that rental
Okay.
income, you will get a deduction of that year interest plus last 5 years, last year's interest, whatever you've paid, divided by 5. For next 5 years, you will be able to get that interest deduction also. And whatever, most probably that will result into a loss.
Okay.
Because you're getting the deduction of the current year interest plus
Okay.
last year's over a period of 5 years. So that loss up to an amount of 2 lakh will be adjusted with salary, and the balance amount will be carried forward for a period of 8 years. So every year you will be able to adjust 2
Okay.
lakhs from your salary, and that will also act as a tax saving benefit.
Okay. Okay. And okay. Thank you. Got it.
So as the time is already extended, we are unable to take any questions further. If you have any questions, you can write your questions to ethica.co.in and also venkatesh@ethica.co.in. The questions will be routed to Asta Jain, and the questions will be answered from them. So I think with this, we came to an end of the webinar. And a special thanks to Asta and Team Pennywise for taking time and joining us and also answering these questions. Even the time is extended. Thank you so much, and see you all in the upcoming sessions. We are expecting many more sessions from them, and also see you all the participants in the next coming session. Thank you.
Sure. Thank you so much. Thank you, Ethica, and everyone for joining. Thank you.
Thank you all. Thank you.